Hello, it's Big Cheds. This is the Trading Encyclopedia Daily Education series on my YouTube at Cheds Trading. I'm on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about the engulfing patterns, bearish engulfing and bullish engulfing. Here's an example of both. Here's another picture. And this shows you that it's better to have this in a trend. So you have a move up and then you have an engulfing pattern showing it's a reversal. So this is a reversal pattern. What do we need to know about this? So with all Japanese candlestick patterns, we want to remember, first of all, they are all short-term reversal patterns. So if I want to have a bearish reversal, I have a move up and then I have the engulfing candlestick. The entire candle body engulfs the prior range's candle body. This is not to be confused with what is called an outside day in classical charting, where the entire range, meaning these wicks, engulfs the entire candle's range. That would be an outside day, and I have a separate video on this. The engulfing pattern refers to the candle body. Now, in equities, you often will have a close and then like a gap up and then an entire body engulfing it. And this would be a pretty good signal for a bearish reversal. The price tried to continue, it was sent back, and it completely engulfed the momentum. So you want to see this in a trend, right? Rather than sideways. If we're sideways and then an engulfing, it really doesn't mean anything, okay? So you want to have a trend before the engulfing, and then you want to look at volume. So you want to have ideally at least 1.5 times the volume on the engulfing candle than the prior candle. So if you had big volume in the first candle and small volume in the second on the engulfing candle, that would make this a weaker signal. Secondly, you want to look at candle body size. It's very important. If this is the first candle and this is the second candle body, yeah, it's technically engulfing it, but barely so. The whole idea of candle body progression is it's showing momentum in the psychology of the market. So when you have it just like this, it's basically almost the same candle body size. You'd rather have it much larger candle, ideally at least 1.5 times the size of the prior body that it's engulfing. So you want to have it coming in a trend. You want to have it with volume, big volume in the engulfing candle. And you want to have it with a larger candle body size, both for the engulfing bullish and the engulfing bearish. It's the same concept in the bullish reversal pattern. You have a big candle, ideally with volume. Now, here's an example. It also helps you to have confluence. For example, using it at the upper Bollinger Band. Here's an example from DOT and the 4-hour. We have the engulfing pattern, much bigger candle body size, much more volume, and it comes after an advance, and it's at the upper Bollinger Band, which is a good place for a bearish reversal candlestick. As we know from prior videos, you can use candlesticks quite well with the Bollinger Bands. So bearish and bullish engulfing pattern, you want to have volume in the engulfing candle. You want to have a 1.5 times size larger candle body. Not to be confused with an outside day. Sometimes you have both, but this just refers to the candle body. And this is the engulfing patterns for the Trading Encyclopedia Daily Education series on my YouTube at Cheds Trading. I'm on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. Thank you, folks. I'll talk to you soon. Big Cheds out.